often asked by a lot of clients, what markets, if I own in this market, should I sell? If I own in this market, should I hold? Most economists are predicting that there's going to be further rate drops, right? Which would theoretically result in further cap compression, which means that the value of the properties theoretically are going to go up. So you wouldn't necessarily want to sell an asset now if you could hold that asset and hold it for cap compression. But if you're not going to see significant cap rate compression, you're already scraping by on debt service and you don't think you're going to be able to do it, now's the time to sell. So I'm going to go through what we're considering a couple markets to consider selling now. These are just our opinions. So if your opinion differs with mine, so be it. That's fine. It's America. People can disagree. Market one for you to consider selling, Austin, Texas. Reasons to sell now. Cap compression is already underway, according to CBRE in the Q2 2025 underwriting metrics report. Austin showed going in cap rate compression for core multifamily assets. There appears to still be a strong buyer demand and investor sentiment. Investors are pushing hard into Sunbelt core markets like Austin, driving up valuations. The demand is there, particularly for stabilized Class A properties. You're going to have to compete, though. Remember that when COVID happened, there was a postponement of a lot of units that were going to come online, and now those units are coming online. So there needs to be a little bit of time for rent absorption in that market to actually take place. So there's a limited supply of new high quality inventory, but we're seeing more and more, and that's in Austin. So if you own an asset in Austin, you might want to think about possibly selling now. Dallas, Fort Worth, reasons to sell now. The cap rates are narrowing. We're seeing more cap compression in Dallas. There's a high migration and population growth. If you haven't heard it before, you should hear it now. Texas is going to be the hub of business around the country in the next 10 years or so, if not already before that. There are population migration into the state of Texas, and in particular into Dallas, Fort Worth. And we have a number of new units that are under development in or around Dallas that has dropped, which means less supply pressures help maintain and increase property values. So holding longer may risk having more supply, therefore, in a more saturated market, competition drives down a little bit of value. Okay. The third one I want you to consider possibly selling now would be in Los Angeles, California. Why? Well, very low cap rates already. LA is its own beast. Like if you lived in California, I lived in California for a long time. Understanding the nuances of that particular market and even the submarkets in California is very, very tight. But LA is showing tight cap rate ranges among core Class A multifamily, and the downward pressure has already done much of the value capture for existing owners. The high cost of debt and regulatory risk are also reasons for you to consider possibly selling now. And there's a possibility of appealing entry for sellers, right? Given buyer competition, the scarcity of comparable good assets, and strong demand in the gateway markets in California means that they might not still be available. All right, so those are properties or markets that you might consider selling now. Here are markets that you probably should consider holding and waiting for further cap compression, meaning we know that the properties in these particular markets probably are underwater or close to the note value of where they traded. If they're underwater, meaning they're less than what your debt is on that property, that means that your lender would have to essentially accept a short sale or something less than the actual debt. So these are markets that you might want to consider holding for a while. Phoenix, Arizona, no big surprise right there. Arizona had one of the biggest run-ups in demand before the Fed started to raise rates at such a historic amount of time in March of 2022. So moderate cap rates with a downward trend. That means that Phoenix has shown a modest cap rate compression in recent periods, but still trades at slightly higher cap rates in some of the Class A infill and suburban segments. So these are areas in which you might want to consider holding. There's a lot of units that are coming online based on essentially where construction ended up post COVID. They're coming online. You need to let those be absorbed into the marketplace to figure out essentially where rent stabilization is going to be. So if you're an owner operator in Phoenix and you can hold, maybe you should hold. Chicago, Illinois. No big surprise there, too. Reasons to hold: cap rate spread and value add opportunity. While core asset cap rates have compressed, Chicago often has more value add in the B and C classes inventory, which tends to show more upside when cap compression occurs, right? That's where the meat is going to be when we actually see cap compression again. There's still some stable fundamentals and affordability issues, but the relative rent growth and NOI growth is necessary for you to be able to hold for a longer period of time. Meaning you're not going to see the value if you buy in now. You should wait and hold if you can. All right, my last pick, Tampa, Florida, right? Tampa, Florida. Reasons to hold potentially. There's a downward cap rate movement is still in progress. That means that we haven't seen cap compression. So if you're able to hold for a longer time, and that time and rate, you're going to be able to essentially obtain a better value on those particular property. Population and job growth is strong, particularly in Florida, as it always has been, and continues to see people moving in there, retirement inflow, remote workers relocating, putting upward pressure on demand. And there's going to comparatively lower entry pricing compared to some of the other markets. So there you have it. 3 markets where selling now makes strong sense, and 3 where holding might still pay off if you expect cap compression to continue. If you're deciding which strategy to use, remember a few things. Model your forecasted NOI growth versus expected cap rate compression in your submarket, and see whether expected value increase from holding outweighs risk. Check your financing. If you have debt that's expiring or maturing, or if your carrying costs are high, those are obviously significant factors that may cause you to pivot. Even if you're in one of those markets that says you should hold, you may want to pivot and try to sell now. And then you need to continue to obviously monitor buyer demand and the comparables in the market or the submarket where you own. These are just 3 of our picks for buying and selling, but for those of you that love commercial real estate, know that there are unlimited amounts of markets and submarkets out there for you to get involved. So for those of you that are looking to buy and to sell, happy hunting. God bless.